Perfect. Well, my name is Fati Mendoza. I am the Director of Alumni Affairs at the Congressional Hispanic Caucus Institute. It's a pleasure to be here with all of you today and our esteemed panelists to share a little bit more about the Public Service Loan Forgiveness Program. Sort of all of the things you need to know, important deadlines, and also from a colleague of mine who successfully had their public service loan forgiveness application approved. So we'll be able to hear a little bit from him about his experience through the process as well. We are more than happy to take questions in the chat. We'll be fielding them as they come in. So to give you a little bit of an overview of today, we will start by sharing a few introductions of our two panelists. We will hear from Dennis, who will share about his experience going through the application process. And Ashley, our guest today, will be walking us through a PSLF presentation. And again, welcome questions in the chat throughout the session. So with that, I would like to start off by welcoming our first speaker, Dennis Gonzalez, and I will share a little bit about Dennis's experience. So Dennis is the Senior Director of Leadership Programs at CHCI. He oversees the Congressional Internship Program as well as the R2L Next Gen High School Immersion Program. Before joining CHCI, he served as the Director of Partnerships at Voto Latino, where he organized and managed Voto Latino's Power Summit conferences, as well as other leadership development initiatives. Dennis also worked with the Gear Up program at the University of Texas, San Antonio, and in social justice and diversity education at the University of Texas at Austin. In California, Dennis worked with the Gear Up program as well as in the College of Engineering at University of California, Davis. He received his Bachelor's of Arts degree in Chicano Studies and Political Science from the University of California, Davis, and a Master's degree in Mexican American Studies from San Jose State University. He also served as the National Officer for Gamma Theta Alpha Latino Interest Fraternity and the National Association of Latino Fraternal Organizations, NALFO. He currently serves on the University of California Davis Alumni Board for the Washington, D.C. chapter and chair of the All UC Alumni Board. Dennis is originally from Los Angeles, California, and is of Salvadoran descent. So thank you, Dennis, for joining us today. And next, I'd like to introduce Ashley Harrington, who is the Senior Advisor to the Chief Operating Officer at the Department of Education's Office of Federal Student Aid. In this role, she advises the COO on policy implementation, operations, and external communications related to the $1.6 trillion federal student loan portfolio. Prior to joining FSA, Ashley served as Federal Advocacy Director and Senior Policy Counsel at the Center for Responsible Lending. Ashley led CRL's federal advocacy efforts, helping to shape fair lending and consumer protection reforms to address racial wealth disparities. Her portfolio includes a range of consumer lending issues with the focus on student debt reform. Ashley also previously worked at the United Negro College Fund and in the New York Governor's Office. She is the author of articles and reports on student debt, particularly as it affects Black borrowers, a frequent media contributor, and she has provided testimony before the U.S. House of Representatives Financial Service Committee and Small Business Committee. Ashley received her bachelor's in public policy and analysis from UNC Chapel Hill and her JD from New York University School of Law. She is admitted to practice law in New York. So a virtual round of applause to both of our esteemed guests and panelists. So with that, I will pass it over to Dennis, who's going to be sharing his experience going through the PSLF application process.
Well, thank you, Patty. So before I kind of go into how I got into the process, I kind of wanted to do a little bit of background just so that people kind of get a sense of where I'm kind of coming from or where the need came from too. So my parents are refugees from the Salvador Civil War and were able to came to the United States in the 80s where I was born. And I'm the third of 5 children who are very close in age. So by the time I got to college, I was the third one in line for my family to send their children to college. So there was 3 of us and almost 4 at the same time at 4-year institutions. And during that time, my parents didn't really trust credit. So my first year of college, I didn't take out any student loans. This was at the University of California, Davis. So I paid for everything mostly myself. But then talking with folks at the university, they're like, no, the credit is okay. Like borrowing, especially for financial aid, is okay. So I started taking out loans my second year of college. Luckily, I was a resident advisor in my 3rd and 4th years, so that allowed me to save more money and not take out as many loans. So I actually survived undergrad with not that many loans. I think it was about $10,000 or $15,000 in student loans for my undergraduate experience. But I decided to go on to grad school, and in grad school, there wasn't really a whole lot of funding at that time, especially for people who were trying to get master's degrees in ethnic studies. So all of my funding for grad school was loans. So a vast majority of my student loans came from 2006 to 2009. And combined, I think my entire student loan debt at a certain point was a little over $50,000, which I was very, I was very focused on paying it off, especially very early on, because I knew that it would just continue to grow. So I tried as diligently as possible to pay my student loans. However, I always wanted to go into public service. So I worked at universities and K-12 education my entire career up to most recently. So I knew I wanted to be a teacher. I knew that that was not going to pay all that well. So most of my payments were already income contingent. I was already making payments based on my income, just even before public service loan forgiveness, because I wanted to focus on education. So after I finished my master's degree, or when I did most of my coursework in 2009, was when the big economic collapse happened in 2008 and 9. So I wound up moving to Texas for opportunities at the University of Texas. And during that time at UT Austin was when public service loan forgiveness started as a program. And it was a very new program at 2008-ish time. So one of the things that I was able to do, luckily, was that I did a lot of stuff HR offered. So when you're at a university, HR offers a lot of things, workshops, trainings. And one of the things that UT Austin offered was they were going to do a workshop on public service loan forgiveness. So I think only like 4 people attended that workshop. But during that workshop, someone came in and she talked about the program, the background, how it was a recent program just started by the previous administration, and what were the things and the steps that we needed to do in order to participate in the program. So they also made recommendations. They recommended, and this is something I don't think people can do, but Ashley may be able to correct me, but I consolidated all of my loans. So I consolidated all of my loans into one payment, then made them income contingent payments. So they gave us a worksheet to tell us these are all the things you need to do in order to make sure that you're compliant and making sure that you work either for a public institution like a university, because I never thought I was going to leave the university setting. I was like, this is great. They'll pay for my student loans. And then, or I work for a nonprofit organization. So I was like, great, sign us up. And myself and my friends, 2 of my friends who the 3 of us went together, we started preparing all of our documentation. I consolidated my loans. I followed on the instructions that they gave us at the time before in 2009 to start making payments. Even though they recommended I not do this, I was still very anxious at the time, and I didn't know if this was a forever program or if the program was even going to be successful. So I still made a little bit more payments than my payments. So whenever my payments came up and they were $200 or $300, I still paid a little bit more, like $50 more, because the anxiety of the interest that I had. I just made the minimum payments and made sure I made payments. Even there were times, and this became an issue later, that when they tried to give me a forbearance for different reasons, like there was a hurricane in Houston, and so everybody in the region of Texas, they were like, oh, you don't have to pay. I still made a payment because I was like, no, I want to knock this out and make sure that this counted. However, I found out that those payments didn't count later, because they automatically put me in forbearance, I think, for those payments. But fast forward a few years, I moved on to the University of Texas at San Antonio, and I was still in the UT Texas system. But one of the recommendations the person who we spoke with made was, every time you change jobs, make sure that you get the form, the Public Service Loan Forgiveness certification form, filled out by somebody in HR, to make sure that you have that document to submit when you go through your application. But they also, I think, recommended that every time you switch jobs, just submit the form. Don't wait till the end. Don't wait for 120 payments. Just start submitting it so that you can start tracking how many payments you've made. So I always did that. Every time I left a position, I left a job, I would submit that completed form so it would update in the system, but then I would keep a copy of it so that I knew when I finally ultimately paid my entire balance, all of those forms were with me. So I was very diligent about making a PDF, but also keeping a physical copy of the original signatures. So then after going into education, I was still in education for a few more years. Then an opportunity came to work at a nonprofit organization in Washington, where one of the things that I even checked was to make sure that I worked at a nonprofit that was a 501c3 that counted towards making payments, because there are some nonprofits that I think that don't count towards payments. So I made sure to find an organization that if I was going to work there, that it still also counted towards the Public Service Loan Forgiveness, so that my loans could be forgiven. And I worked at that organization for almost 4 years. And then when I went to my current position in my current organization, I still considered the 501c3 nonprofit status, because I didn't want to just leave 7, 8 years of making payments on the table if it was going to be forgiven. And again, every time I changed jobs, I submitted those documents. So I knew that I had 70 out of 120, 76 out of 120, like 90 out of 120 payments. So fast forward to 2000, because I've been making payments from 2009 all the way through. So in 2010 or 2020, I started trying to apply for loan forgiveness. However, it was rejected because they said that I still needed to make the 120 payments because some of my payments didn't count. So then I had to go through and have them audit it and go through every single payment to make sure that all of my payments counted. Because sometimes when I would submit documents, they would count some of my months and sometimes they didn't count some of my months. So every time I resubmitted it, I would submit, I resubmitted the documents. Sometimes it would fluctuate. Sometimes I counted some of them and sometimes I didn't count some of them. So I resubmitted and it actually took until the third time that I submitted it, and including the last few years through 2021, that my balance that I had by summer of last year, so June of 2021 was when my loans were forgiven. So by the time all of my loans were paid off, I was forgiven $17,000. However, that $17,000 was the remainder was interest on interest. I had already paid the principal off at this point, so I was just paying interest on interest. So luckily they were able to forgive the last $17,000 of my loans. But that was, again, like, I had already paid off the principal several years ago, I think. But based on 17 years of interest for some of those loans, or 20 years, it became a significant amount after a certain point. And I do know there are certain questions coming in, but I'll quickly note that they were direct loans, federal direct loans. So I had different kinds of loans. So Perkins loans, federal direct loans. And the reason why I was consolidated was because some of my loans previously in 2006 were Bank of America private loans. And when I consolidated all of my loans, they went under this is, I don't think you can do this anymore, but this is, again, is an Ashley question. I'm not sure. Some of my private loans were consolidated into my public loans. So, but this was a long time ago, so I couldn't give you the exact details. All I know is that it was recommended that I consolidate my loans all into one payment, and that's what I did back in 2009. So I think those are and I'm just kind of looking through the questions. Sorry, like I want to make sure that I answered some of them since folks have that. But again, like some of the stuff that I did was like many years ago. So I don't know if they still count. I don't know if you can still do some of these things, which I will let Ashley answer. But I know the consolidation was something that was recommended at the time.
Dennis, thank you so much for sharing. And yes, I think you answered the specific question around, you sharing your consolidation process. And I know there's some questions as to whether that's required. And so I think Ashley might be able to help answer that. And as you shared, Dennis, from when you applied to now, we know that the process has changed over time. So with that, I really want to thank you, Dennis, for giving of your time and being willing to share your experience with us. If you're able to stay with us, you are more than welcome to. I'm sure some folks might reach out to you directly through the chat or anything like that might have some specific questions. But again, I really want to thank you for your time and again, sharing your story with us. Well, with that, I would like to switch gears and invite our next panelist and speaker today, Ashley Harrington. I will pass it off to you.
Thanks so much, Patty, for putting this together. And thank you, Dennis, for sharing your story. Yes, a lot of things that you touched on actually talk about some of the pain points in the program that we've worked to fix. And that's what we're going to talk about today. So I'm going to share my screen. I'm going to share a lot of information with you. We're going to talk about how PSLF normally works. So you have that same baseline, and a lot of it will touch on the things Dennis talked about. Then we're going to talk about these time limited changes that we have going on right now, the PSLF limited waiver that have gotten so many borrowers closer to forgiveness, and then we'll have some time at the end for questions. So let's jump right in. All right, can everybody see that?
Yes.
Awesome. So what we're going to talk about today is something called the limited PSLF waiver, and it is part of the Biden-Harris administration's efforts at providing targeted student loan relief. Even before we got to the announcement that we had last week on Wednesday that I am going to touch on next, we had already approved more than $32 billion in debt cancellation for 1.6 million borrowers. That had already exceeded the most debt relief provided by any administration in history. And a big chunk of this was over $10 billion for 175,000 public servants through improvements to PSLF that we're going to talk about today. But we did announce something really great last week that I do want to make sure that everyone saw. It is very exciting. The Biden administration's student loan debt relief plan, which provides up to $20,000 in debt relief for borrowers making less than $125,000 as a single person, or $250,000 for a married household if they got Pell Grants when they were in college, and up to $10,000 if they didn't receive Pell Grants. This is huge. This is going to be a one-time debt cancellation that's going to occur later this year, and more information will be provided soon. We also announced that we've extended the student loan pause a final time through December of this year to make sure borrowers have time to get their stuff on track and be ready to enter repayment and stay on track with their student loans. We also announced a proposal for a new income-based repayment plan that's going to make it more affordable and sustainable for borrowers in the long run and make their student loan payments more manageable and less burdensome for those who still have debt after these one-time adjustments and after all of these other programs. So we're very excited about this. And I want you to know that you can do both. So if you're looking at the targeted student loan relief and thinking about PSLF, they don't cancel each other out. You can do both. And in fact, I want to make sure that everyone still gets their applications in for PSLF by 10/31, because we're going to talk about how some of the changes that are really great, that have really helped so many borrowers, are going to end there, and you don't want to miss out on those. So we have this limited PSLF waiver. As I said, it's provided over $10 billion in forgiveness for approximately 175,000 borrowers. That's in addition to the more than 1 million borrowers who have gotten closer to forgiveness. 1.1 million borrowers have gotten an average of a year's worth of additional credit towards the 120 payments for PSLF. You know, prior to this payment, when PSLF was created in 2007 by Congress, and prior to this limited PSLF waiver, only 7,000 borrowers had gotten forgiveness. And now we're at 175,000 borrowers. That is huge. And the way we got there is through the limited PSLF waiver. So I can't say it enough. It is a game changer. It's transformative. It has changed so many people's lives because it has made a program work that didn't work before. So today we're going to talk about the basics of PSLF, how it normally works. Then we'll spend some time on the PSLF waiver. We'll talk a little bit about the PSLF help tool, which is what you're going to use when you apply for PSLF. Spend a little bit of time on resources, and then we'll have time for questions. So let's talk about the basics, how PSLF normally works. And this will align so much with the things you heard Dennis talk about earlier. So normal PSLF, the normal rules, forgives the remaining balance on direct student loans after a borrower has made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. And this is just a chart that breaks down how that looks, right? 120 qualifying payments on direct loans while working for a qualifying employer when applying for and receiving PSLF. And at the end, whatever's left over is forgiven and is not taxable income. Again, this is how normal PSLF works. And you may have heard, and you heard me say qualifying several times because that is where the confusion set in with PSLF over the years. We like to say you had to have the right job with the right loan with the right repayment. And we're going to talk about each of those pieces in turn. So first, let's talk about the right loan. Under normal PSLF, an eligible loan is a direct loan. It does include consolidation loans and it does include Parent Plus loans, but we'll talk a little bit more about Parent Plus loans in a second. It doesn't include something called FEL program loans. These are Federal Family Education Program loans. These are loans that were originated by private institutions, private lenders like Sallie Mae, Wells Fargo, Bank of America, but guaranteed by the federal government. It also doesn't include Perkins loans. These are loans that were issued by institutions of higher education and guaranteed by the federal government. And it doesn't include any other federal or private student loan. And back when PSLF was created in 2007, the FEL program was actually the bigger loan program. There were more FEL borrowers than there were direct borrowers, but these borrowers couldn't automatically access PSLF. Now they could consolidate. FEL borrowers and Perkins borrowers have always been able to consolidate into the direct loan program. But under normal rules, when you did that, you started at zero. So even if you were consolidating direct loans, for whatever reason, you started at zero. So what is counts as the right repayment? It's a payment that's on time, made on a standard plan or any income-driven repayment plan, has to be for at least the amount due, and it can be non-consecutive. You don't have to work 10 years in a row. It can take you 15 years to get to 120. It can take you 20 years to get to 120. It doesn't matter, you just have to get there. It can't be a payment that's more than 15 days late or made on a graduated, extended, or alternative plan. It can't be for less than the amount due, and it can't be made when not required. So if you're in school and your loans are deferred or you're in that grace period following when you leave school and you make a payment, that doesn't count. You can make multiple payments in 1 month and have that count as long as it adds up to the amount due and is paid within 15 days of the due date. You can also make lump sum payments, but it's limited to 12 months or until the IDR recertification date, because you do have to recertify your income every year for income-based repayment. And it doesn't allow you to get forgiven any sooner because you still have to work those months in qualifying employment to get the credit. So just a quick flag on Parent Plus loans, because we get a lot of questions about whether Parent Plus loans are eligible. Absolutely, Parent Plus loans are not excluded from PSLF. The thing about Parent Plus loans is they're not eligible for all income-driven repayment plans. In order for a Parent Plus borrower to get access to income-driven repayment, which you really want to be on if you're working towards PSLF so that you have something to forgive at the end, Parent Plus borrowers have to consolidate. Once they consolidate, their new direct consolidation loan has access to one of the income-driven plans, and it's called ICR, Income Contingent Repayment. ICR is the least generous of the IDR plans. So while this does enable parents to work towards PSLF, we do advise them to use our loan simulator to make sure that the payments they're going to have to make in the short term are manageable compared to the payments they could be making on a different plan and what it means for their long-term versus short-term goals. So we talked about the right loan. We talked about the right repayment. Let's talk about the right job. Full-time, 30 hours a week or the equivalent. Government, that's federal, state, local, tribal, or military. It includes all 501c3 nonprofits, and it includes some other nonprofits if they provide a qualifying public service. So that things like public health, emergency management, early childhood education, and things like that. It doesn't include part-time work unless it adds up to full-time. It doesn't include volunteer work. So if you're working and not getting paid, that doesn't count. Unfortunately, it doesn't include any for-profit entities, even if you're doing essential work or doing something similar to what a person working at a government or nonprofit does. It doesn't include labor unions, and it doesn't include partisan political organizations. So we like to say it's about the employer. It's not about the job. We don't want to know. We're not going to ask you what you do for that agency, what you do for that nonprofit. We just want to know who you work for, who pays you, who's on your W-2. And if it's a federal, state, local, or tribal entity, including public schools or military branches, it counts. If it's a 501c3 nonprofit, it counts. If it's another type of nonprofit that provides one of those qualifying public services, it counts. You could even have multiple part-time jobs, and as long as it adds up to 30 hours a week and they're all eligible PSLF employers, that counts. You're full-time in public service. There's also something called temporary expanded PSLF, which is not to be confused with the limited waiver that we're going to talk about next. And it's also created by Congress, and it was just for borrowers who couldn't get PSLF because they were on the wrong repayment plan. They were on extended or graduated plan, and it enabled them to still get forgiveness. So just a quick flag, because I mentioned earlier that we just extended the payment pause through the end of December. I want to make sure everyone here is aware you can get credit for every single one of these months towards the 120 payments for PSLF. You can get credit for every single one of these months towards the 120 required for PSLF. I like to say that twice because nobody ever believes me. As long as you were still in public service and you certify that employment, you can get these 30 months. I think it's 30, it's going to be 30 now, towards your 120. And that puts you more than a fourth of the way towards the 120 required, even though we have not had to make a payment. You can get credit for every single one of these months. So you don't want to miss out on that. If you still have full-time public service employment, you certify it and you'll get credit for these months. So that's the basics. That's how PSLF normally works. And there were so many issues over the years, so many people who didn't understand how it worked, a lack of communication from servicers, from the department, from everyone, and so much confusion that there were so many borrowers getting denied. And we saw that as a problem. So one of the first things we did is we launched the limited PSLF waiver, and that has changed the game. So now we're going to talk about the changes. So we announced this last year on October 6th. And basically what it does, these are time limited rules where you can get credit for past periods of repayment that normally don't qualify for PSLF. Under these new rules, you can get credit for any prior period of repayment, no matter what repayment plan you're on. We're not looking at that anymore. So if you weren't on income-based repayment, we don't care. We're not looking at what repayment plan you were on, regardless of your loan program. So we're not looking at your loan program. We're not looking at whether you made a payment. So if you missed a payment, you can get credit. Whether you made a payment in full or on time. We just want to know if you were in something we call active repayment status, and we define that very generously. We are even accepting some periods of forbearances and deferments, and we're going to talk about that later. So this is huge. I can't say this enough. I see a lot of frustration in the chat. I've heard a lot of frustration over the years. I have been frustrated. I am a student loan borrower. These changes are real. You don't get from 7,000 to 175,000 without real transformative changes. It's been less than a year and we have 175,000 borrowers. So hear me when I say these changes are real and they make a huge difference, and they can make a huge difference for you. So we didn't change anything about qualifying employment. So you still had to be full-time employed with a qualifying public service for every qualifying public service employer for every period of repayment you want to get credit for. But you can get credit. Remember, it doesn't matter what repayment plan you are on. We're not looking at your type of loan. You could even have missed a payment, right? You could have been delinquent. As long as you weren't in default, you could get credit for that time. And this is for everyone who has direct loans, everyone who has already consolidated to the direct loan program, and everyone who consolidates into the direct loan program by October 31st of this year. So this is the other big part. You can get credit for payments made prior to consolidation. So earlier I talked about how if you had FEL loans or Perkins loans and you consolidated, or even if you had direct loans and you consolidated, once you did that, you started at zero. Under the waiver, that is not the case. Under the waiver, you no longer start at zero. So even if you've already consolidated and you started at zero, you can now submit paperwork for the time prior to consolidation and get credit. This is a huge deal. You can consolidate now and get into the direct loan program and not start at zero, but you have to do it before 1031 because that's when the waiver expires. So it doesn't matter if you have direct loans, FEL or Perkins loans. Doesn't matter what repayment plan you're on. I promise you, it doesn't matter. We are not looking at what repayment plan you were on prior to this. Doesn't matter your loan type, with the exception of Parent Plus, which we'll talk about next. We didn't change the employment requirements, so still full-time employed with a qualifying employer. But if you still have FEL or Perkins loans, you have to consolidate into the direct loan program and get a PSLF form in by October 31st, 2022. Even if you're not at 120, even if you just enter repayment, even if you just enter public service, you still want to apply by this deadline because you want to get as many credits as you can and continue working towards 120 after that. So you might fall into one of three borrower groups. If you only have direct loans, you just want to make sure you have a PSLF form on file for employment after October 2007, because that's when PSLF started. I get a lot of questions from folks about whether if they only have direct loans, they should consolidate. If you only have direct loans, the only reason you might consolidate is if some loans are older than others. So say you have grad loans and undergrad loans. Undergrad loans are 5 years older and you worked public service in between. Under the waiver, if you consolidate that all together, the entire consolidation loan can get credit for the undergrad loans, and thus you can get your grad loans forgiven sooner along with your undergrad loans. So that's, if you only have direct loans, that's what you would think about whether to consolidate. If you've already consolidated to the direct loan program, you want to file a PSLF form for the time prior to consolidation. And if you still have a FEL or Perkins loans, you have the most to do because you've got to consolidate and get a form in, and you got to do it by 1031 so you can take advantage of this waiver. So I want to pause and talk about Parent Plus loans again, because we talked about them earlier and we talked about how they are eligible for PSLF. And while they are eligible for PSLF, they're not eligible for additional credits under the waiver. So we talked about how Parent Plus borrowers want to consolidate if they want to get an income-driven repayment plan. So there's going to be a lot of Parent Plus borrowers who have direct consolidation loans. They cannot get additional credit on the direct consolidation loan for the time when it was purely a regular old Parent Plus. So if you consolidate a FEL student loan, you get credit for that pre-consolidation. But if it's just a regular old Parent Plus loan, you can't get any additional credit. Now, if you consolidate a Parent Plus loan with your own student loans, you can get additional credit based on the student loan, just not for the Parent Plus loan. And you can, and then after consolidation, so if you missed a payment on direct consolidation loan, or you were on the wrong repayment plan, after, you can get credit for those months under the waiver, just not for any time pre-consolidation. So I also get a lot of questions about how you find out what type of loans you have. You can do that right at studentaid.gov. When you log into your account, you're going to see your dashboard and your aid summary. You'll be able to click directly on that, scroll down to the loan breakdown. In the loan breakdown section, you'll see a list of loans. And if you expand them, you'll get the full name. And every single loan should have direct, FEL, or Perkins somewhere in the title. And if it doesn't say direct, it's not direct, and you're going to need to consolidate it if you want to get PSLF for that loan. If it says FEL or Perkins, you're going to need to consolidate that if you want to get PSLF. It'll literally say in the title, direct, FEL, or Perkins. You don't have to wonder what type of loan you have. You can look on your studentaid.gov account. So just a quick recap. To take advantage of the waiver, you want to confirm your employer is qualified, and we'll talk in a second about how you do that. Consolidate those loans if you have non-direct loans, submit a PSLF form, and do it all by October 31st of this year. So I do want to flag a couple of things about consolidation because I saw some questions about that in the chat. Now, I will say that we have taken the biggest sting out of consolidation, but there are still things that happen when you consolidate that I do want to flag for you. But we've taken the biggest sting. Historically, the biggest sting has been you start at 0 for PSLF and you start at 0 for income-driven repayment. We fixed that for PSLF. We also announced an IDR adjustment, so no one's starting at 0 for IDR or PSLF. We'll talk a little bit more about the IDR adjustment in a second. So we've taken out the biggest issue of consolidation, which is starting at 0. But other things could happen. When you consolidate, you essentially get a new loan and your monthly payment could change. And if you know, and so it could go down, but it could also go up, because if you no longer have a partial financial hardship, you could lose access to some of the income-driven plans and your monthly payment could be higher. So you really want to use, so you do want to use Loan Simulator and game that out at studentaid.gov, but I just want to flag that that could happen. If you have unpaid interest and fees, your principal balance will go up because they'll get capitalized. But if you're working towards PSLF forgiveness, you likely don't care about that because that's just more that's going to get forgiven at the end. Your new consolidation loan will generally have a new interest rate, and it's going to be based on a weighted average of the loans. Again, if you're working towards PSLF, you likely don't care about that because that's just affecting what gets forgiven at the end. And you don't have to consolidate all of your federal student loans. You can consolidate 1 loan, 5 loans, 8 loans. It's up to you. But once that loan is dispersed, you can't undo it. So I mentioned the IDR payment account adjustment. We announced that in April, and we are gonna implement that later this year. But it's also a huge deal for IDR borrowers and PSLF borrowers, because under the IDR adjustment, we're giving borrowers credit if they have 12 or more months consecutive or forbearance, or 36 or more months of cumulative forbearance. 12 or more months consecutive or 36 or more months cumulative for forbearance. You can get that credit towards IDR. And if you certify your PSLF employment, you can get that credit towards PSLF. So over the years, we know there were a ton of borrowers who were steered into forbearances by servicers when they could have been on income-driven plans that were more affordable. So this is to remedy that. So if you were in one of those long forbearances, we're going to automatically give you credit for that later this year. And all you have to do is make sure you have your PSLF forms on file for that time, and that will get added to your credit towards 120. We're also counting months spent in deferment prior to 2013 as under the waiver, as long as it wasn't an in-school deferment. And we're counting economic hardship deferments after January 1st, 2013. So that's extra forbearances being counted, extra deferments being counted. And we're going to do this automatically. You just have to make sure you have forms on file for every period of public service after October 2007, so that we can automatically apply these to your account later this year. So we're going to go over it one more time: deferments, forbearances, and the waiver. What automatically counts? You can automatically get credit for long-term forbearance. And for us, that's 12 or more months consecutive, 36 or more months cumulative. Deferments prior to 2013, as long as it wasn't an in-school deferment. Economic hardship deferments are eligible. And some military-related forbearances and deferments. And if you were steered into a short-term forbearance, while it's not automatic, you can submit a complaint to your servicer and get credit for that. So just a flag about what to expect when you're expecting, because I know folks are submitting things, are concerned about what's going to happen. And also Fed loan servicing, many of you may be aware, was the PSLF servicer for years and recently announced that they're leaving the program. And so now folks are being transferred to MOHELA. Nothing to worry about. I was transferred to MOHELA 2 weeks ago. All PSLF borrowers are being transferred to MOHELA. New PSLF borrowers are submitting their forms directly to MOHELA. It's okay. It's a normal part of the process. Transfers are a normal part of the process. Nothing is going to change about the terms of your loan, the credits for your PSLF, any of that. It's just that Fed loan is leaving the system and MOHELA is the new servicer, and everyone's going to get transferred eventually, unless they're close to 120, and then they'll stay with Fed loan until they get forgiveness. But it's nothing to worry about. And when you submit your consolidation application, it will be consolidated by AidVantage, another servicer. And again, that's okay. Then you'll get sent to MOHELA. They're just helping us out with consolidations. When you submit your PSLF form to MOHELA, if you don't have direct loans yet and you're waiting for your consolidation to go through, it's going to be held there. That's okay. You still want to get it in because you don't want to miss the 1031 deadline. Consolidation can take 30 to 60 days. That's okay. As long as you have the form in and sent and it's being processed by 1031, you're okay. You've met the deadline. So we just want to reassure borrowers that we're not going to hold any borrower responsible for the time it takes for us to process, any delays we make, any errors we make, right? You just want to do your part, get your stuff in, and the rest is on us. As long as you do your part before 1031, on or before 1031, you will be deemed to have met the waiver. So we talked about the waiver. Now we're going to talk about the help tool, which is what you want to use when you're applying for PSLF. Before we get directly to the help tool, we also now have a standalone employer tool. This is connected to our employer database. The same is connected to our help tool, but this is available without having to log into a studentaid.gov account. It is publicly facing. Anyone can use it. They can go and check and see if an employer is popping up in our database, if they're popping up as eligible or ineligible, and find out more information. Now, I will say our database is not perfect. It will never be perfect. It's never going to have every single qualifying employer. It's never going to have every single employer that exists. And we know that. We know it's not infallible. We are constantly working to improve it and add new employers, but it's never going to be perfect. And that's okay. So if you get a result in the help tool or the employer tool that doesn't look right and you're a little frustrated, it's okay. It's just because our system is not perfect. It doesn't mean your employer is not qualified. It just means it's never going to be a perfect system, but we're working to improve it every day. So you're going to use the help tool, and it's going to do, and when you use it, it's going to generate this form. This is what the paper form looks like. But you really want to go to the help tool to generate this, and you can find that at studentaid.gov/PSLF. When you go there, you'll click login, and you're going to log into your studentaid.gov account. And the first thing it's going to ask you for is your employment history, because that's what we need to know from you. We need to know, do you have qualifying PSLF employment? And so that's the first thing we ask you for. And you'll notice the one thing you're going to need for every single employer you're trying to get credit for is something called an EIN, Employer Identification Number. You're going to need it for every single employer. You'll see right here that we don't ask you for the name. We don't ask you for the address first. We ask you for the EIN. And so you're going to need it. And you can find it on your W-2 in box B. You'll see it here in red. You can also find it on your pay stub, or you can ask your HR department for it directly. But you're going to need that EIN for every single employer you want to get credit for PSLF. I can't say that enough. So once you have the EIN, you're going to put it in, and a couple of things could happen. So first, if you're a government employee like me and you work for a federal, state, or local government, you could put in your EIN and multiple entities could pop up. Because for governments, a lot of agencies share EINs. So when I pop in my EIN, Department of Education pops up among like 20 agencies, and I have to scroll through and find it. So if that happens, that's okay. You just want to find the agency or entity that's most closely matched to yours. Don't freak out. Just a lot of entities share EINs. So that's one thing that could happen. You could put it in and it could pop up and say eligible, where you see likely and eligible in this orange letter. It could say eligible in green. If that happens, that's great. You're in the best shape because our system already knows that your employer is a qualifying employer, and that's very exciting. But it could pop up as likely ineligible, which just means undetermined. It just means we don't know. We haven't looked at it yet, and it's nothing to freak out about. It just means it's going to have to go through a different process, through our employer adjudication process. We're just going to have to look at it, and that's okay. Again, it just means our system isn't perfect. It doesn't mean your employer is not qualified. It just means our system doesn't know that yet, and we just have to take some extra steps. It could pop up as ineligible in red, which means we know what your employer is, but we don't think it's qualified. We think it's a for-profit, or we think it's a labor union, or we think it's a nonprofit that doesn't provide a qualifying public service. And if that happens and you think FSA is wrong, my employer absolutely is qualified, you should still continue with the help tool. You'll have to submit supporting documentation like screenshots of the website or bylaws for the organization, and it'll still have to go through our employer adjudication process. But if you believe that your organization is a qualifying employer, you should still continue with the help tool process. Don't give up, don't be frustrated. And the last thing that could happen is you could put in your EIN and nothing could pop up. It may not recognize it at all. And then you'll have to manually enter the address and things like that. And you may have to submit supporting documentation. And again, if that happens, don't freak out. Just means our system isn't perfect. It's still going to have to go through that extra team. But as long as in any of those situations, as long as your employer is later approved, you're going to be good for the PSLF waiver. So I don't want you to worry about that. So you're going to be able to put in multiple employers. Once you're done with that, you'll click next. It's going to take you to this loan tips section that just talks to you about different things like consolidation and the COVID-19 emergency relief. And you'll click next section. You're going to come to a piece called application details, where it's just asking you, have you made 120 qualifying payments? And it's just a yes or a no. Now, even though you may think you have made 120 qualifying payments because you listen to me talk about the waiver, you know how it works, and you know you're going to get forgiven. If our system doesn't yet think you have 120 because a consolidation hasn't gone through or something else has happened, you're still going to have to put no. That's okay. It doesn't mean it's going to change how your application is processed or what happens. You just have to put whatever aligns with our system and allows you to move forward. Don't worry about it, but you do have to answer the question. Then it's going to take you to your personal information. You've logged into your studentaid.gov account, so all of this is going to pre-populate. But if you need to change it, you can in account settings. And you're going to click continue. Then you're going to get to review it and save. You're just going to make sure everything looks right, your employers look right, your personal information looks right. And you're going to click save. And if you had eligible employers, now comes the fun part. You're going to get PDFs. You're going to get PDFs that look like that form I showed you a few slides ago for each employer that you put in there. Each eligible employer. And then you're going to have to print it out and get it. You're going to have to sign it, and you're going to have to get it signed by your employer. And then you're going to have to submit it to MOHELA. And you're going to have to mail or fax it in unless you have MOHELA, and then you can upload it online. Yes, I did say mail or fax. Yes, you do have to mail or fax it in if you don't have MOHELA. You also want to make sure you're following our signature rules because you don't want your form to get sent back on a technicality. Believe me, it's happened to me. So let's talk about what's acceptable. And these are the rules for both your signature and the employer signature. It can be hand drawn using your signature pad, using your mouse or your finger. That's great. It can be a scanned photo of a signature that was hand drawn on paper. That works. Or it can be a literal wet signature where you printed it out and signed it with an ink pen. That works. You cannot use a typed cursive font. You can't like go into Acrobat, go to edit text and like pick like a cursive font and type it in. Doesn't count. You can't use digital certificate-based signatures. So like DocuSign, even if you have DocuSign or your employer has DocuSign, you can't use that. That doesn't work. So you want to make sure you're following these signature guidelines, you're signing it, you're dating it, because you don't want to get it sent back on a technicality. And then once you do that and you're enrolled in PSLF, you get to watch your progress on the Servicer's website. So you'll be able to literally track which payments are ineligible and why, which payments are eligible and why, which payments are qualifying, which just means not only were they eligible, but you also certified employment and they're counting towards the 120. So you'll be able to see it right there. And this is what it looks like on Fed Loan, and it'll look like something similar on MOHELA. I just don't have a picture of that yet. You'll also be able to track it on studentaid.gov. Remember, I told you about your dashboard. See here, it says loan type. It says direct graduate plus, so you know it's a direct loan. And it tells you how many PSLF months you have. So you'll be able to track it right there as well. And finally, the best place to go for more information about the waiver is studentaid.gov/PSLF waiver. To apply for PSLF, you want to go to studentaid.gov/PSLF. For more information about PSLF generally, you want to go to studentaid.gov/public service. And you want to submit your PSLF form to MOHELA because they are the servicer as of July 1. And here are some other ways to contact for FSA for tools and resources. And we will share these slides afterwards. But for now, I'm going to stop sharing and we are free to do some questions.
Thank you, Ashley, for sharing that thorough information. So we do have, you answered a lot of our questions or our guest questions during your presentation. Some that came up that I'm not sure I heard be addressed is a question if individual income or household income is used to qualify.
So that is for the general forgiveness program, right? And it's going to be based on your 2020 or 2021 taxes and your AGI. But more details are going to be released about that in the coming days.
Great, thank you for sharing that. And there was a question around one individual support, and I know on the last slide you shared some phone numbers and live chat sessions. So that's great. And yes, I will be emailing all of the registrants the slides. The session is also going to be posted on the Congressional Hispanic Chamber of Commerce YouTube channel as well. So you'll be able to access that as well. And I see there's a hand raised, Ida Guevara.
Yeah,
If you
this is,
want
yeah, it's
to-
Efren. How you doing today?
Go
Yeah, my
ahead,
name's
go ahead.
Efren Guevara. Yeah, I had a question for Ashley. Ashley, yeah, I'm a caregiver. I'm a caregiver provider for my mother. But when I went down to the office, I did the PSLF form and I downloaded it. I submitted it to Mohila, but before I did that, I went down to the office there over here on 2707 South Grand Avenue in Los Angeles, California, and they told me that they couldn't do anything for me because my employer is my mother. So as far as filling out the form, did I have to put my mother as my employer because I work for her? But even though IHSS pays me, now my mother doesn't pay me. She's the one, the recipient for that gets the funding for. But you see what I mean? It's kind of confusing, my question. I don't know if you understand what I'm saying.
I kind of do, and unfortunately for PSLF, it's about the employer that pays you directly, and so you have to be a W-2 employee and be getting that form.
Yeah, I get it from them, but even when I get the W-2 form, when I file taxes, my mother's name comes on. It doesn't, you see what I mean? It
But
says
on your
employer.
W-2, who's the EIN?
Oh,
Who's
it's
listed as
them.
your
It's
employer?
them. It's them. Yeah, it's IHSS.
Is that a state agency?
Yeah, that's in-home support
So
service. Yes.
that's what you're putting. That's what you put in the help tool. That's the
Okay,
EIN.
I did that. I did that. That's what I did on the PSLF form because I wasn't sure. I just wanted to get
From what you're saying, it sounds like that's what you put.
okay, no, I did. I put the IE number from them, but I was second guessing myself because I wasn't sure because what they told me down there. Obviously, like I'm telling you now, you're giving me the right answer. They misinformed me. See what I mean? So I wanted to get it straight. You know what I mean? So I wanted to make sure I submitted it right because I already submitted it. I actually called Mohila and they still just haven't processed it because I even sent it priority mail. So I just want to make sure. But I'm every week, every Monday, I'm calling them just to stay on top of it and make sure they get it. And once it's in their system, then I'll be like, okay, you guys got it. No, because I need this forgiveness. So if I gotta harass them every day,
I want you to get it, but I'll just say that processing does take a while now because we're in this transition from FedLoan to Mohila. We also transitioned one of our systems, so just bear with us, but know that even if there's the delay in processing doesn't impact you. As long as it's later approved, even if it's approved in November or December, you're good. You've met the waiver because you got your form in. You won't be held responsible for the fact that it may take Mohila a little bit of time to get to your application.
Okay, and another question I have, as far as when I was in school, I had deferments. You said the deferment don't qualify you while you're in school, right? So you don't qualify for deferment because that's automatically deferred when you're going to school, right?
Right. So what I was saying is there's a lot of folks who, leave school and go back to grad school or to finish school. And so they've entered repayment before. And when they go back to school, their loans are automatically placed in deferment, but they're working full time.
Yeah.
Even if you're working full time, if your loans are on in-school deferment, you're not getting credit because you can't get credit because your loans are deferred. If you've already entered repayment and then gone back to school, you can actually opt out of that in-school deferment and then get on an income-based plan or be on the payment pause right now and get credit if you're working full-time in public service, but you'd have to call your servicer and literally opt out of that because if you're in school, you can't get credit even if you're working full-time in public service if your loans are on in-school deferment.
Yeah, okay, that's fine. Thank you very much. Appreciate that.
Great. We have a question that actually has come up twice in the chat, and it's regarding folks who are having a difficult time obtaining prior employer signatures. Any suggestions of things folks can do?
Yeah, it's a great question. So at first I'll say, we really want you to try to get a signature. That is your best bet. That's your holy grail. That is our preferred method. If you absolutely can't get one because your employer closed or because you're trying to get signatures from 2010 and they only keep records for back for five years. You absolutely can't get a signature. You'll be able to indicate that on the application, and you can submit your W-2s or pay stubs or deposit records for those months, but you are going to have to submit something that shows you were employed by that employer.
Thank you, Ashley. I don't see any other questions in the chat. We'll take Sandra.
Hi, thank you. Thank you for asking that question, because I have that particular problem. I worked in the US Senate in 2008-9, and I have asked my congresswoman, I've asked Senator Padilla, Congresswoman Matsui, I've contacted the Sergeant of Arms. No one gives me back the form. I have literally, like, I'm about, my head's about to explode. I wrote to PLSF and they told me I can't just say I can't submit W-2s because it's still an existing employer. So
No.
I'm like, I'm gonna lose out on this because
No, just check the form. I can't get a signature.
Mhm.
And submit your W-2s or your pay stubs and deposit records.
Okay, and if I can't find all my I'm gonna have to try to see if I make W-2s for all the years that I worked there, but yeah, it's been a struggle, but thank you.
No problem.
We have one more question around, I know we've talked about them and it's come up quite a bit around just the amount of time it takes to process and to get a response. Is there an average or anything else you can share?
So it really just depends, right? If you have to consolidate, your consolidation can take 30 to 60 days. And if you don't have any direct loans, your PSLF form is going to be held until your consolidation goes through. If you already have direct loans and you submit your PSLF form and it popped up in our system as eligible, it could take 30 to 60 days. But again, we're still experiencing unprecedented volumes, which we love because we want as many people to sign up as possible. So still bear with us. But we're Mohila's trying to get through things as quickly as possible. If your employer didn't pop up in our system as eligible and has to go through our employer adjudication, that can take a few months. But remember, as long as it's later approved, you're still good for the waiver. So just be patient with us and know that we're working on it, that you aren't going to be held responsible for delays in our processing. As long as you did your part, you're going to get credit. And just know that, like, when we apply it to your account, if you end up having made more than 120 payments on a direct loan, can't be the fail loans, people are getting refunds. People are literally getting money back from Treasury for their student loans. So there is always a remedy. There's always going to be a path forward. It may take a while, but even if your stuff is approved after October 31, you've done your part and you're good.
Thank you, Ashley, for that. Well, I know we are right about time, and I do want to be mindful of folks' time. Anything else that is, you'd like to share as we're wrapping up? I know there's folks that have questions. I will be sharing the PowerPoint slides that will have the contact information there for one-on-one support, which I know is needed. Anything else, Ashley, that you'd like to share with folks joining us today?
Just don't miss out on this deadline, 10/31. You don't have to get every single form in, just get one in by 10/31 and do the rest later. You just don't want to miss out on this opportunity. People are getting closer to forgiveness. People are getting forgiveness. You don't want to miss out. You want to get everything in by 10/31. Don't wait till the last minute. Do it now. I like to say, when in doubt, fill it out. It does not hurt to get your forms in. Just do it.
Great. Well, we see folks in the chat also thanking you for your time and being here to answer so many of our questions. As a PSLF applicant myself, this was really informative for me, and I appreciate you sharing your time with us. And thank you, everyone, for joining us. Enjoy the rest of your evening.
Thank you, everyone. Thanks, Patty.
Thank you.